Going on, you guys? This is the Debasement Index. My name is Angel Rios, and this is a channel solely focused on building capital in a fiat world together. It's awesome to be back with y'all. Today, we're going to do something that I very much enjoy, which is going to be the start of a new series for this channel, which is breaking down the companies on which the Debasement Index is going to be built. Not just companies, but also hard money assets to protect ourselves against monetary debasement, inflation, and just how the overall economy is going. And if you hear me a little bit stuffy, I do apologize. I am beating this terrible flu right now. We went to the hospital. My wife and I and the family, and bunch of people have COVID, other people have RSV, so on and so forth. So if you hear me a little congested, that's why. And I'm not at work, so I battled myself out of bed to bring this video to you guys, and I hope you guys enjoy it. So without further ado, today's company that we're going to be breaking down is going to be Strategy. CEO is Phong Le, executive chairman and founder. Ex-CEO of the company, Michael J. Saylor, which people in the Bitcoin community will be very familiar with. Not just him, also Phong Le, the executive team, and the company, formerly known as MicroStrategy. And this is where we're gonna talk about the company. We're gonna do a company breakdown. We are going to explain their value proposition. We are going to talk about their addressable market, so their total addressable market that they're going for. Why I think Strategy is an amazing investment. We're also going to talk about MNAV, Bitcoin treasury allocation, and basically what their business model is going into the future. So without further ado, guys, let's get into Strategy. So first, I have to preface, none of this in this channel is investment advice. This is purely for entertainment purposes only. And with that being said, let me just say that I am incredibly bullish and optimistic about this company. Before we get into why, let's talk about the history of the company, because a lot of people have this negative misconception that Bitcoin treasury companies, SBRs, anything like that is companies that had just come out as something new, and it's not really old and established firms or established companies, and that's simply not the case. And it's certainly not the case with Strategy, formerly known as MicroStrategy. If you want to find it, to invest in it, or to look up the stats, the ticker symbol for this company is MSTR. So Strategy, all right. It was founded in 1989. So it's been around for 40 years almost now. And it was a business intelligence software company. Okay. And it gained notoriety when in the 1990s, they actually got their biggest client, which was McDonald's, which at the time added $50 million in revenue, and which is $10 million in revenue contract with McDonald's, which was a huge thing back in the day. That happened in 1992. So the company's job is really to set up intelligence software for companies in order to make business decisions, develop mobile apps, things like that. So they were really on the cutting edge of this stuff before it was even a thing, back in the 80s, early 90s, so on and so forth. Then the company, as far as the stock market is concerned, got caught up with all the other .com bubble companies, and the stock after that never really recovered to the same level as it did before. And it's been competing in a very hard market, competing as an operating company. It generates cash flows every single year. Positive, by the way. And as far as the business operations are concerned, and it was just ticking up 1-2%, and the market didn't really care about the company at the time. It was funded by Michael J. Saylor, Michael J. Saylor really didn't come on. He came on the scene with a book that he wrote called The Mobile Wave, where before anybody else, he was saying, hey, phones are going to demonetize maps, Rolodexes, music, or a form of music, right? CD player, so on and so forth, because you could just have everything on your phone. And everybody called him crazy, called Apple going to $2,000 a share back in the day before all the stock splits, so on and so forth. And it's gone even more than that. So he's really seen the trend of technology and where technology goes through. And that's where he's been setting up his business. Now, the real interesting thing is MicroStrategy's Bitcoin journey, or their initial Bitcoin allocation, didn't actually start until 2020, when they actually had to do it because we're coming in an era of increased monetary debasement. They dropped interest rates to zero, so the cost of capital was zero. And when you're an operating company, and like them at the time, they were holding $500 million in reserves and treasuries go to negative yields, well, you're ruining shareholder value because there's no interest on your capital reserves. So that was really the time where, him and the rest of his team, Michael Saylor I'm talking about, they decided, hey, we either sell the company off and do a fast death, we do a slow death, and then just keep taking it along until we're done, or we can do something about it. And what they decided to do is convert the $500 million treasury from USD, US dollar denominated reserves in the form of treasuries, to Bitcoin. So let's get into that quick journey real quick. So guys, simply put, the reason why Michael Saylor, at the time CEO of MicroStrategy, now known as Strategy, and now he's the executive chairman, decided to purchase Bitcoin in 2020 is because the Fed dropped interest rates to zero. So the cost of capital became zero, which goes against every single law of nature. With that being said, at the time, his company had $500 million in their treasury reserves, and they were in dollar-denominated debt, U.S. treasuries, so on and so forth. Now, when that happens, that dollar reserve that is in U.S. treasuries becomes negative yielding, right? Bonds during COVID became negative yielding and stayed negative yielding to now. The rate of monetary debasement during COVID went to 15, 20%, and then it stayed around 7 to 10% since. So his idea was, hey, I am depleting shareholder value right now. So I have three choices. I can either do a slow death and give the money back to the shareholders. I can do a fast death and sell the company, my enterprise software company, or I can fight. Now, what he decided to do is fight. And in that paradigm shift, in that moment where governments were waging war on capital, on money, during that paradigm shift is when he discovered that Bitcoin would be where he would set up his allocation because of the properties that Bitcoin holds. Very low stock to flow ratio. Asymptotically, it is non-inflationary. There will only be 21 million coins. And it beats the rate of monetary debasement, it beats inflation, and it appreciates at a rate higher than those things. So in the interest of himself and his company and his shareholders, he decided to initially, well, he wanted to do the whole thing, the whole 500 million all at once. But initially he decided to the company and himself decided to put 250 million into Bitcoin. And then later on did another $175 million purchase, and then went on and on into there's been billions of purchases ever since, now having a total Bitcoin reserve of above 700,000 Bitcoins, valued at almost $60 billion. Okay, so that's why he decided to do it. And this is his same explanation for his company is the same explanation that I am offering, not just where I draw conviction for myself, but also where I think a lot of people are going to end up going to, because once you understand monetary debasement, this is kind of the overall conclusion that you come to. It's hard assets, hard money, non-inflationary assets. Okay. So let's get into the company strategies metrics. Okay. So MSTR's metrics. Okay, if you go on strategy.com, you'll be able to find this information as well. Now, when we purchase with our hard-earned currency, because the dollar and any other fiat currency is not money, it's currency, okay? But when we exchange that value into something, we want to make sure that we have conviction into what it is that we're buying. And the way you have conviction into what you're buying is by doing the homework. Yeah, if you just YOLO with no conviction into companies because it's going up or because your freaking buddy told you and all this stuff, and then it goes down, you're going to sell. And you haven't earned your conviction, so you're going to lose money. Most people end up hearing from their friend that has $1,000 invested that, hey, dude, this is the move, man. The stock's going to make you so much money in 2 weeks. And then it crashes. Most people buy at the top of things. So again, it's time in the market, not timing the market. But earn your conviction. And this is how you earn your conviction, man. You do your homework. Okay, so current MSTR price as of right now is $133. Might go up and down since I took a screenshot of this page. Market cap, you'll see it on the left, denominated in millions, so 44,300 million, which is $44 billion. It's the market cap of the company. And it has huge volatility. If you look right under that, the implied volatility is 86%. Okay, that's 86% for the upside. Okay, and 86% vol to the downside. All right. Now, the 3-month return is negative 44%. The 1-year return is negative 60%. And the base of return since you'll see it where it says BSE return. Since the adopting the Bitcoin strategy is 976%. So again, you could have bought it a year ago because your buddy told you and it's down 60%. And you're like, hey man, you made me lose some money. But if you buy things for the long term, this is how you get the long-term results. 9xing your money, 10xing your money, or sometimes you even have a 100-bagger. Okay? Now, the one thing that I really want to preface on this, okay, is this bottom part under this line. And that's the Bitcoins that they have in reserve. So the dollar-denominated value of those Bitcoin reserves at this time, at this current Bitcoin price point, is 49 billion. Okay. Their average Bitcoin purchase price is $68,634 a coin. Or sorry, that's the Bitcoin price now. And their average Bitcoin price that they've bought at, so their average allocation has been Bitcoin at $76,000. So they're at this time, they're below on their Bitcoin holdings compared to what they paid for the total stack of 76,000. Okay. Now the total stack of Bitcoin that they have at this time is 714,644. Huge amount of Bitcoin. They're probably going to get to over 1 million Bitcoin this year. And they already have around 3% of the supply, which is crazy to think that 714,644 Bitcoin is only 3% of the total Bitcoin supply. I mean, it's amazing how Bitcoin is so decentralized. That is one of the most attractive things about it. Okay. Now, the company itself also has a US dollar reserve of 2.2 billion. So it says here 2,250 million, but it's 2.2 billion. Okay. And the company has now shifted into providing yield to people that is actually livable. So they're fixing the yield problem that has affected not only yield investors, but retirees for the longest time through products like Stretch, Strike, Stride, Strife, Stream, any one of those. And we're going to get into those and what they are and why I think that's what's going to propel this company into new heights. Okay. Now, their debt, you'll see it here at the bottom left, it's 8.2 billion, which means that their net leverage for the company is only 12%. Meaning the amount of debt that you have compared to your assets. Now, the average S&P 500 company, I think, has a net leverage between 14 and 17%. So his net leverage is even less than your average S&P 500 company, their debt, which I think it's great. Now, the preferred stock is those things that I'm talking to you guys about, and I'll get into them. So it's Strike, Stride, Strife, Stretch, and Stream. But Stream is in the European market, but it's an equivalent to Stretch. Now, here on the bottom right is an amazing thing that you need to focus on. Okay? So we'll get into the preferreds, but basically what the preferreds is, it's a yield investment. They're yield investment vehicles where you give the company money. They invest that money, in this case, Bitcoin, and you get a yield back or an interest rate back. Okay. Now, the average yield for their products is between 8 and 11.25%. All right. Beating money market accounts and high yield savings accounts, so on and so forth. And some of them even offer a lot of upside, like Strike, for example. Okay. Now, MNAV. Okay. We're going to get into, I'll break this down in another slide because it's so important. But simply put, so MNAV 1.19, what does that mean? Well, it means that the company is being valued at a premium, 0.19 premium above their Bitcoin holdings. Okay. And this is where this kind of comes into the amplification. Okay. At the bottom right. The amplification of this company is 34%. Well, Angel, I amplified against what? Amplified against Bitcoin. So if you don't feel safe, excuse me, y'all. If you don't feel safe allocating money into Bitcoin directly, you can buy Strategy to give you some exposure to Bitcoin. Now, that exposure is wonderful exposure. And the reason it's wonderful exposure is because the company has amplified 34% against Bitcoin. So what does that mean? At this time, if Bitcoin goes up $100, MSTR Strategy will go up $134. And if Bitcoin goes down $100, okay, well, Bitcoin will go down more than that, 34% more than that. All right. So that is essentially what that amplification means. So you have amplified exposure to the upside. However, you also have amplified exposure to the downside. That's why it's better to buy Strategy on drawdowns than on straight up bull markets. Okay. So that is the initial MSTR breakdown. Okay. So the preferreds that they offer, which offer yield investors an opportunity vehicle for Bitcoin exposure, are right here. Okay. So Stride, Strike, Stretch, and Strife. Now, the one that I'm going to break down a little further, I've done a video about this one as well, is Stretch, because I think it offers the biggest addressable market. And this is the one that's going to propel Strategy to much higher levels, is Stretch, right? So let's get into these things. So Stride, Okay. It trades right now at $74.85 and has a dividend yield of 10%. All right. Strike. This one offers a lot of upside, and then it has the smallest dividend. So it has a dividend of 8%, and it is now trading at $77.15. However, it's MSTR correlation, so it's correlation to the common stock, which is MSTR, which we've already talked about. It's very volatile to the upside and to the downside. So its correlation is 76%. So on strike, you get a lot of that volatility that you get on the MSTR common stock, in addition to a yearly dividend of 8%. All right. And then Strife. Okay. So Strife right now is trading at $97.68. And it has a fixed dividend yield of 10%. Now, let's talk about Stretch. Okay. So remember in a video that I've done in the past, Stretch fixes a huge problem. Well, what problem does Stretch fix? It fixes the retirement problem, right? The income and retirement problem. And it also fixes a huge issue with that, which is no yield on checking accounts and in savings accounts in the bank. And then you have effectively still negative yielding high yield savings account, which gives you 3.75% or 4% when the rate of monetary debasement is 7 to 12%. So it fixes that issue for people. And that's the addressable market that Stretch is going for. It wants to buy US government treasuries that give you 4%. They're negative yielding. You're actually getting poorer holding those compared to something that actually keeps up with the rate of monetary debasement and gives you a dividend yield. So let's get into Stretch real quick. So with Stretch, there's three things that I'm bullish on about MSTR, about this company strategy. One is Bitcoin, their Bitcoin allocation. I believe their Bitcoin allocation is only going to end up being worth exponentially more over time. And I'm bullish on the amplification that the company has. So I think there's a chance to outperform Bitcoin by owning the common stock. Number two is the executive team. Fong Lee, CEO, Michael Saylor, executive chairman, so on and so forth. I believe they're going to be good stewards of the company. They're going to add shareholder value. And not only that, but they are attempting to make the world a better place. They're attempting to fix issues in the financial world that are only going to have a positive effect and a positive impact to society. And that makes me feel really good. And having a stake in a company that is doing good things around the world, I like that. I try to do that. And I believe MSTR strategy to be one of them. The third thing is Stretch, the preferred stock Stretch. Why? Because it is solving the retirement problem and it is solving the negative yielding savings accounts and treasuries and bonds that we have now. So Stretch right now is trading at $99.67. And it's meant to trade at $100 par value. So if it goes above $100, what the company does is it sells more shares and then brings the price back down to $100. Okay, so that's where they mean it to be trading at, is $100. Okay. It offers a current dividend of 11.25%. Think about that. The dividend that you get on $100 here is 11.25%. So you get what, $11 and some change every year for every $100 that you put in. Now, here's the amazing thing about this vehicle is that it's a ROC dividend. It's a return of capital dividend, meaning it is tax deferred until you sell the underlying asset What does that mean? If I'm a retiree, and let's just say I worked really hard and I have 1 million bucks, and I decide, okay, well, I have options here. I can use that $1 million and put in a high yield savings account and get 3.75%. Well, that's not going to get me through retirement. Well, I'll put my money in bonds, municipal bonds, city bonds, federal government bonds, and get a yield of between 4 and 6%. Well, what's the problem there? The problem there is that the rate of monetary debasement is above that. So essentially, you're actually getting poorer over time owning treasuries, whether local or federal. And so it's not really, it's giving you an income, but it's giving you a depreciating income. And now people are living longer. People are living healthier into old age, 20, 30 years after 65. And you need some income security, especially if you're a retiree. So on top of that, when you get that 4%, 5%, 6% from those bonds, that's a taxable event. You are going to get taxed on that. So it's even worse. So if you own $1 million and you have a bond that's paying you, say, 5%, so you're getting $50,000 a year from that bond, hey, you're paying taxes on that. Government never stops taking your dough from you, all right? Unless you go ahead and buy Stretch. And because it is a return of capital dividend, not return on capital dividend, it's tax deferred until you sell the underlying asset. So what does that mean? Not only is the yield higher, way higher, almost a 3 times multiple higher, but it's tax free. So the multiple on that yield, on that interest rate, just went up even more. Right? It's called a tax effective yield. Okay, so the tax effective yield for this is actually more like 18 to 23% because you're not paying taxes on it unless you sell your underlying Stretch shares. So if I have $1 million in Stretch, I am getting now around $111,000 a year in income that is untaxed. If I sell the underlying asset, I will have to pay a tax on the overall amount of dividends that I have received. But if I don't sell the underlying Stretch, I never have to pay, or a retiree never has to pay income on that dividend. So now you have a tax-free income for the rest of your life and you can retire in peace. Just wait until retirees get a hold of this and understand this. The problem is the retirees that are coming into retirement right now, most of them are all boomers. And boomers, the boomer generation is extremely hard-headed, very thick-headed. And it's hard for them to adapt to change. But it's going to come to a point where they're going to look around for how it is that they can secure retirement. And this is going to be avenue number one. And this is why I'm so bullish on Stretch. And I think that because with that money, if I buy Stretch or if a retiree buys Stretch, what the company does is it goes and buys Bitcoin with it. All right. And I think this is what's going to propel Strategy to new highs. Because it's not just fixing a problem for retirees, man. It's fixing a problem for working people too. Dude, I keep putting my money in a bank account and I don't get anything, but I can, or in a savings account for my emergency fund, for my daughter's college tuition, son's college tuition, whatever. And I'm not getting any return on that. But on this, I'm getting 11.25%, which is even more amazing because what's the average return of the S&P 500 if you put your money in the VU or any other S&P 500 index vehicle? What's the average? 7 to 10%? Some years are better, some years are worse. Average 7 to 10%. So you're even beating the S&P 500 benchmark. It's not just retirees who are going to use this. Is a lot of people are going to use this. Now, even more amazing thing about this, and this is why I know that the executive team are being good stewards of the company, of shareholders, and of people who own these preferreds, such as Stretch, is look here at the BTC rating of this vehicle, of this preferred. It's 4.6. What does that mean? For every dollar of Stretch shares that's issued, there's $4.6 worth of Bitcoin backing it. So it's almost 5 times over collateralized. Think of it this way. If there's only $1 million worth of Stretch shares available, there's $5 million worth of Bitcoin backing that $1 million. So you have 5 times protection. So it's even more over collateralized than other assets. The average collateralization of investment vehicles in the stock market is maybe 2 to 3%. Sometimes on the high end, 3.5 times on the high end. So you're getting a tax deferred dividend. You're getting something stable that trades around $100 at par. And you can be calm and know that it's almost 5 times over collateralized by the underlying asset. It's amazing. It's amazing. And let's go ahead and look at and this is why I'm so bullish on the company. One of the third reasons why I'm so bullish on the company. I think this is going to take MSTR. I don't make price predictions, right? But I think it's going to go up several multiples because of something like this. Because you are rewarded in the marketplace by the amount and size of problems that you fix for people. And this is fixing a huge issue. Therefore, it has a huge addressable market. So let's look at the addressable market for Stretch, which are high yield savings accounts and money markets. Right? Money markets, you can think of those as treasury markets, right? People buying bonds. Those are money markets. And then high yield savings accounts. Let's look at the amount of money that's allocated to those right now and how I think a lot of that money is actually going to flow into Stretch, which in turn is going to flow into Bitcoin because Strategy is going to buy Bitcoin with those inflows, which in turn is going to make the price of Bitcoin rise, which in turn is going to make the price of MSTR rise. Let's take a look at that. So money market funds. It's funds that invest in treasuries, in government treasuries, government debt. Okay? And they can offer between 3 and 6% yield on those. And as you can see in this chart, it's only gone up over time because U.S. debt has only gone up over time. And this is essentially the main vehicle, or the purchasing of treasuries is the main vehicle by which the U.S. raises money to operate. Okay? But in U.S. money market funds, this is straight from the Fed. It's almost $8 trillion. $7.7 trillion. That's in these funds. And people are starting to figure out that these funds and their interest rates or their yields are negative yielding, effectively negative yielding. Not only do you have to pay tax on it, right, on those interest rate payments that they give you, but it's also no longer the safest asset to own, government bonds. It's simply not. You're getting poorer with them. And on top of that, it's no longer risk-free. It is extremely risky to own government bonds now. And these money market funds, they're in a lot of pension portfolios and 401ks and target date funds, so on and that type of investment vehicles. And it's mostly retirees or people with 401ks, so on and so forth. All right. What happens when people start to realize that all this money that I have in these government bond vehicles, these U.S. Treasury vehicles, is making me poorer. And I have to pay taxes on that. And then financial advisors, your family, and everybody around you start slapping Stretch in front of you and saying, have you heard of Stretch? Why are you still in a government bond? That's my bet. That's what I think is going to happen. So let's just say only 2 trillion. Actually, let me be super conservative. Let's just say 1 trillion of this total $8 trillion flows into Stretch. Well, if Bitcoin is a $2 trillion market cap asset and 1 trillion flows into Stretch, and then Strategy goes ahead and buys 1 trillion worth of Bitcoin with it, well, Bitcoin just went up 45%. What happens when all of those people that move to Stretch start telling all their old friends while they're sipping a margarita by their pool, hey man, like, why are you still buying government bonds? Like, have you heard of Stretch? And it's going to have the same network effect as Bitcoin does. Metcalfe's law is just going to take over. I mean, the amount of sheer money that Stretch has the addressable market for is wild. Wild. And that's why Strategy is also super bullish on Stretch, because they know the problem that it fixes for people. Now, this is just retirees for the most part. But what about regular working people, not retirees? You know, I have money in a high yield savings account. You probably have money in a high yield savings account. Matter of fact, comment on this video. If you've made it this far, congratulations. I know it's long. But comment on this video if you think that Stretch would be a better vehicle to put your emergency savings into. Right? So I'm just extremely bullish on Stretch. I mean, I just think it fixes such a huge issue. And I think people are going to start realizing that little by little. It's not a matter of if at this point, in my opinion. It's a matter of when. Now, when you look at MSTR common stock, I mean, it's volatile as heck. I mean, as we talked earlier, it has like an 80 vol on it. It's 80% volatility. Goes up and down a lot. But to me, volatility is not necessarily a bad thing. It's a good thing. To me, volatility means vitality, right? It means that there's something valuable and the market is trying to decide how to price it. What's one of the best performing stocks ever? Well, one of the best performing stocks ever is Tesla. And people didn't know how to value Tesla for the longest time. Matter of fact, I don't think they really do now. And it's made people an incredible amount of money, an incredible amount of wealth. But it was crazy volatile as well, 60, 70, 80% vol on it. Because, again, the market was just trying to decide how to price it. But the people that spent time in the market and not spent time timing the market and understood the fundamentals of the company and where it was going, well, they did incredible. And I think that's going to be the situation with MSTR. I mean, right now, Bitcoin's on a drawdown. Okay, we're kind of hitting this mini bear market at this time. So because MSTR stock has amplified Bitcoin, because of the leverage behind it and it has the amplification on it, well, it goes down more. But that's a good thing. I like that. Because I love buying things. I love buying into stock price weakness. I don't buy into fundamentals weakness. So if you're closely following a company and the fundamentals of the company change and you decide to sell for that's valid. But if the fundamentals of the company don't change and it's just stock price weakness, well, then you're buying the same company for cheaper. And that's a good thing. That is actually how you take advantage of dollar cost averaging and bringing your average price of a purchase for that stock down. And that is how you get greater and greater returns over time. But you need conviction for that. Don't borrow conviction from other people. If you borrow conviction from other people, you're going to sell. You're not going to reap the benefits of sticking to your conviction, of sticking to your guns. Right? So at this time, MSTR is going down week to week to week to week to week. I think it's at 130 right now. It was at 500. But when situations like that happen and I realize that it's just oversold, I'm going to buy more. That's what I'm doing. I'm not telling you to do that. I'm just telling you that's what I'm doing. And again, nothing in this video is even investment advice. This is for your entertainment, so you do whatever you want. But that is actually how you get greater returns. It's catching a falling knife. It's dollar cost averaging on the way down. And that's how you get greater returns. Right? Bringing your average cost price down. And I like that. So, yeah, again, I'm just buying this stock now pretty heavy. Buying into the stock price weakness. Fundamentals have changed the same, and I'm incredibly bullish on this company. And it's my opinion that this company is going to build great wealth for people. Great wealth for people. And I think the history books, the financial history books will be talking about this company for a very, very long time. So I hope you guys enjoyed this breakdown of MSTR. I certainly enjoyed making it for y'all. And you know, it's just great things for this company in the future, and I'm incredibly optimistic, optimistic about it, and I feel good investing in this company because I think it's doing good things. I think it's doing good things for the world and good things, especially for our older population when they catch on to the wonderful products that they offer. So that's it for me, guys. Don't forget to subscribe on this video. You know, if I earned your subscription, if I really did earn your subscription and you enjoyed watching this, you know, go ahead and hit that subscribe button. I'm nothing but flattered. It means a lot every time I see one more subscriber on there, and I see it growing little by little by little. It's exciting, you know. So I really enjoy that. You know, hit a like on the video or a comment. Let me know what you thought about the video or what you think about MSTR, Bitcoin in general. Hit the notification bell so you don't miss any new videos that this channel and myself put up there. And remember, this is the Debasement Index. My name is Angel Rios, and this is a channel solely focused on building capital in a fiat world together. Have a great day, guys.